What's up, everyone? Welcome to the daily macro update for Tuesday, August 19th. Taking a look at the number one chart that I'm paying attention to over the remainder of this year, which is the 10-year US government bond yield. We're seeing a little bit of a retraction from bond yields from the top end of their trading range. And not only that, but you're having a little bit of a pop in the dollar, a little bit of a pop in volatility, stuff that we've been talking about over the past week. It seems like volatility is still remaining well below 20, um, as well as there's just a lot of things on discount. Um, you know, I see that there's a lot of things that are in the news, specifically with something like Palantir, right? So this is having a pretty decent correction here. Um, I think this was off of the news that the government was going to not do some type of like $800 million contract with them or something like that. And really, this just brought it back to the uptrend that it's been doing. So I mean, yeah, something like this still in bullish trend, but yeah, this is a pretty decent candle. Let me take a look at the volume here on accelerating volume. So yeah, I mean, this wouldn't be an initial just ape into, although I was buying a little bit of it, but I'll probably just wait until it has a little bit of a bounce. Not to worry though. I mean, there's a lot of things that are still performing relatively well. I thought today, since there's not too much of the macro news, we can just go over some of the different things that are up a lot versus things that are down. Intel. So this is one that's been doing fairly decently over the past couple weeks in August, specifically with I don't know how it's illegal, but the Trump administration is saying that they're buying stake in it, which is pretty funny. You also have things like not that one. Best Buy is having a decent week already, a decent day. What are some of the other ones here? Another one that my team and I really like is Tempus, so TEM. This is one that we were calling out a couple weeks ago, but that has been a decent performer. Another one is Celsius. I don't know if you guys know this energy drink, but this has been one of the top performers all year. And so, this is one that has just been continuously doing well. Let me see what else here has been doing well over the past month or so. Let's see. Yeah, another really good one, interestingly, was Wayfair, ticker W. This is one of the best bullish trends from the April lows. This is up over 230% since the April lows, outcompeting a lot of the large mega caps as well. I know a lot of people, buy furniture on Wayfair, but they've been doing considerably well. And then let me see what else here has been doing well. Reddit. Reddit has also been one of the major top performers, especially over the past month. Just in August here, after earnings, it's having a little bit of a correction today, but it's up 50% in just 2 weeks. So that's another one that has been one of the top performers over the past month here. But yeah, there's a lot of top names that get discussed all the time in the headlines, and a lot of those are down today, as well as something like AMD having a bit of a correction here. Bull market still remaining in trend. I was buying a little bit as well today. But yeah, what's interesting is that Bitcoin continues to lose some trend strength here. This is we're seeing some price decline on higher volume. Same with Ethereum, but I mean, both of which remain in bullish trend. Ethereum is in a stronger bullish trend. So if anyone, I would be choosing Ethereum. Let's see here. yeah, lots of mega caps as well having a decent correction. Nvidia having its single, largest down day that it's experienced, over the past couple weeks here. Same with Meta, Broadcom, and Tesla. So a lot of the mega caps having, almost all red days except for Berkshire, which has been having a little bit of a pop here. And so, yeah, it's no surprise that the S&P 500, which, is 30% weighted in a lot of these huge mega caps, it's not a surprise that that's down. Interestingly, when you take a look at the S&P 500 equal weight, it's actually up on the day. So it's showing that this is a little bit of a revert to mean for the large mega caps. Meanwhile, there's other parts of the S&P 500 that are actually performing pretty well for today. It's just everyone's crowded into these large mega caps, and so that's why, there's a lot of people who are saying, "Oh my gosh, a market correction," when it's really just the crowding effect into these large names. Meanwhile, there's plenty of bull markets to go around. I mean, you still have the VIX at very low levels. Our process, if you guys, are not subscribed to our free newsletter called the Daily Index Ranges, we provide our daily ranges for the SPY, QQQs, as well as IWM every single morning before the market opens. And what's interesting is that when you take a look at these ranges over the past couple weeks here, or actually over the past, just last week even, you saw that on Friday and Thursday and Friday, this was reaching right at the top end of the trading range, which in our signal, if something is in bullish trend, and reaching the top end of its trading range on lower volume, right? We were talking about that all last week. If you just go back on a few videos on Thursday and Friday, you'll see, or on Friday we didn't go live, but we went live on Thursday. That is when we saw not so much a top, but just a sell opportunity at the top end of the trading range on lower volume. And so that's what our process calls for. And so for those people who are subscribed to our daily index ranges newsletter, you also receive that. And if you guys haven't already, I highly recommend that if you want to receive those trade alerts and index alerts. But yeah, I mean, really it was pretty obvious here. So hopefully you guys were raising cash over the past week or so that you can now take advantage of dips on red. The only real macro data today is that we see that new housing starts, specifically with single family units, that actually had a decent little pop in acceleration from June to July with the hopes of rate cuts, which again, I mean, the housing market is fooled into thinking that because the Fed funds rate will decline from then cutting rates, that automatically means that 30-year fixed mortgage rates will decline as well, which normally, they are closely related, but you have times like last September where they lowered the Fed funds rate, and then 30-year fixed mortgage rates, the 10-year bond yield, the actual rates that you and I pay went up from that point. So, that's kind of like what we saw last year, where after right around August is when you had a large spike as well, and into September, and then as soon as rates started to rise again, you saw that rate of new construction or new construction starts decline again, which I wouldn't be surprised if that happens again here. But that we also saw that there was an update on the Atlanta Fed's GDP nowcast for the Q3 estimate. Now, you guys have to remember that when it comes to these quarterly estimates of GDP, it's not that it's the GDP for that quarter. It's just with all the data that we've received so far the entire year up until that quarter, it is the annual estimate for the entire year, right? So when you see Q2 GDP or Q3 GDP, it's not GDP for just that quarter. It's the annual estimated GDP for the entire year up until the end of Q3 or Q2 or whenever the last thing was out. Okay, so that with that logic, whenever the Q4 GDP comes out, we already have all the data in for the entire year at that point. So the Q4 GDP data is pretty much the final number for that year. Okay. For some reason, there's a lot of people who think like the GDP number every single quarter is like for that quarter, kind of like how we get monthly data for CPI or inflation, but that's not how it works. Just wanted to clear up that basic confusion. All right. So yeah, we're seeing that continue to be an annual estimate at around 2.3%. So, that's still a lot lower than last year. But again, we'll see what happens going into the remainder of the year. There's still a lot of data that still needs to come out here. But what's also interesting is that when taking a look at the Cleveland Fed's nowcast for inflation, we continue to see that this is going to remain elevated for core PCE, which again, that's the Fed's preferred inflation gauge. And so that's having it rise still. So you're still going to have an inflation problem. And then even for the August print, which comes out, I think it is, let me see here. Let's go to the Forex Factory calendar and let's go over to September. When is let's see here. I'm trying to look for the September FOMC meeting. Okay, gotcha. So yeah, that second week in September, on September 11th, you get the CPI number, which that currently is estimated to be at 2.8%, which is where it's essentially at, or it's a little 0.1 basis points higher, or 10 basis points higher from where it's at right now, year over year. And then it has core CPI staying at 3.1%. And so that comes out Thursday, September 11th. And then you have the FOMC press conference, 6 days after that. So, yeah, I mean, you still have a decent amount of time left, as well as some major inflation data points to come out until then. When you take a look at the, or not the inflation nowcast, where are we here? If we look at the CME FedWatch tool, this is the futures market. You can see that we're seeing a continued slight lean towards the 25 basis point cut. Well, I shouldn't say slight. That's a pretty decent majority of 85% essentially that they're going to cut by 25 basis points. 15% says that they're going to remain paused. This 15% was an acceleration from this time last week, but we'll see what happens from here. You also have the yield curve having a little bit of a bear flattening this week. The overall trend is a steepening. So that's typically in favor of risk assets. It's usually when the Fed or, any type of government or basically policies monetarily from the Fed as well as fiscally from the government are supportive of liquidity. And so that's been the trend here as well as the current phase. But over the past immediate week, we've been seeing what's called a bear flattening, which is where the short end of the curve rises slightly higher than the long end of the curve, right? And so that's being signaled as short-term tightening there. All right. So the market just closed here. We'll go ahead and take some questions, but yeah, let's take a look at also some of the best performers in terms of on a 1 month basis here. I know that we talked about Reddit. We talked about Wayfair and Celsius. Which other ones are pretty large here? Astera Labs, ALAB is the ticker. that's having a little bit of a correction today as well. So yeah, you have a lot of decent bullish opportunities here that could be providing a correction. All right. Let's go ahead and go to some of the questions here. Small caps correlated positively or negatively with the S&P 500. They're still positively correlated. Yes, I mean if you take a look at IWM, it's also having a little bit of a correction here, but yeah, small caps as well as tech and the SPY in general are positively correlated at this time. How do you see gold's trend? Yeah, I mean, on this day today, as it just closed here, gold has lost its bullish trend. It is now neutral in our model. So, yeah, what that means is that I'm probably not going to keep buying more from here, even though I do have a decent gold position. But yeah, whenever something goes from bullish to neutral in our model, that just means that I'm not buying it anymore, right? Just going to see what happens. If it goes from neutral to bearish on accelerating volatility and volume, then I'll probably just get rid of it. Will the market go into a correction if we do not get the first rate cut in September? I'm not quite sure. I mean, the market has been celebrating cuts. So, I mean, if we do get a surprise pause, which would be a surprise at this point, then, I'm sure the market would not be enjoying that initial shock. That's for sure. But I mean, it's been doing this whole cycle for the past 3 years, right? The Fed has remained higher for longer, but, we continue to get data that is still supportive of, things going higher and liquidity being ample. So, I mean, it wouldn't be any type of foreign type of environment that we haven't seen over the past 3 years, right? And typically the Fed starts to cut rates when things are slowing. And so you have to realize that whenever the Fed starts actually cutting rates and enters into a rate cutting cycle, it's typically not for a good thing, for a good reason. And also, too, that's typically when you start to see the most drawdowns in the market is during those times. Do I think the Fed will cut? I'm not sure. We're going to be getting some more data here on Friday during that morning's Jackson Hole Symposium speech by Jerome Powell. So we'll see. I loaded up on VXX for the September dump. Thoughts on VIX for September? Yeah, I mean, I'm not sure. I know that there's a lot of people who are anticipating a large correction here in September, but in reality, it's like we can't predict what the market's going to do. So, I mean, you're definitely taking a gamble there, young Mamba, by doing that. I hope it works out for you. But I mean, that's just, I don't even think of the markets in that way. Like I never hear a news article or hear someone on, online talking about their narrative and then me being like, oh, I'm going to make a market bet based off of that person's commentary. Right. And, it seems kind of ironic because I'm the one coming online here and talking about my thoughts, right? But I never advocate you guys make decisions based off of these videos that I make. What I want you to do is create your own process so that you can take whatever I say into consideration with what you already do in your own process, right? And if you don't have a process yet, that does mean that you are just gambling, which is probably why you're even watching my videos, because things probably haven't worked out the best for you, or maybe they have worked out really well for you, but the market is also up 20%, almost 2 years in a row. So everyone should be doing well over these past couple of years. But, you know, a lot of people don't have a profit taking strategy, meaning like, okay, you've made a bunch of money. How do I not just, you know, give it back to the markets in the form of losses? And how am I able to just keep continuing to grow this portfolio over time? And so, not only does my team and I show people how to speak the language of macro, but also as well, we have an exact process that helps us navigate these market cycles here. And so, if you guys need help with forming your own process, I would highly recommend going to our website and starting to learn, kind of what we do there. Seasonality, September has historically been a red month. Yeah, I mean, I do understand the effects of seasonality, and I do agree that historically, you do get, volatility rising, as well as, a lot of the times you do have these types of events that happen in late August, September through early October. Doesn't happen every single time, but I mean, yeah, you could definitely see that. And the thing is that like, I don't short something, or I don't buy, um, you know, I don't buy or sell things based off of like seasonality or what could happen or what should happen. That's not a process. That's still gambling, right? I'll short something that's already in a bearish trend that maybe, went up to the top end of the trading range. I'll definitely do that. Let me see if I can find an example for you here. Let's see. Let's see. What is this company here? Yeah, something like this. If this keeps on going higher, like this is an example of a great short. Somebody highlighted United Health. Yeah, great example of something that is looking like a fantastic short, right? C3 AI. Yeah, I have heard of that before. Unfortunately, this is in a bearish trend. So, is any bull cycle for crypto altcoins? Yeah, right now it's Ethereum as well as DeFi. So it's Ethereum season and DeFi season. It's not a across the board altcoin season at this moment in time. Would you use VIX calls as a hedge? No, because the VIX remains in bearish trend. So I don't buy calls on things that are in a bearish trend. Warren Buffett loaded up on United Health. Yeah, he did that at a very terrible price. I don't know why his fund was buying something in a bearish trend. That makes no sense. But yeah, I mean, it looks like the market is trying to anticipate, or not necessarily anticipate, but it's awaiting the commentary this Friday here. So it's a relatively quiet week here in terms of macro data. Let me see if I can. It does open up a little bit towards the end of the week, like on Thursday. We have flash manufacturing and services PMI, existing home sales, as well as the Philly Fed manufacturing index. But, you know, it's just Thursday and Friday morning that are the two, largest data dump days this week. And then next week, still, a little bit of a lighter week again. So yeah, we could have just two. Well, we also have core PC on Friday. So yeah, the next couple weeks are a tad bit light in terms of, large macro data. What are we expecting from Friday's symposium? Not sure, really. I mean, I think the market is uncertain as well. But I mean, Powell pretty much has two options. He could either, tell Trump to kick rocks and I'm not cutting, in which case Trump would try and do everything he can to fire Powell at that point. Or he caves in and then ends up cutting rates for the sole reason that he's being pressured by the government, which would hinder their independence clause, as well as when you take a look at the two things that they pay attention to, the unemployment rate, as well as inflation. You have very low unemployment rate historically. And then you also have inflation remaining well above their 2% goal. So, I mean, just based off of their quote unquote dual mandate there, just based off of those things, then there's no reason to cut rates. But they might still cut rates because of the fiscal pressures. Now, for those people who watch this channel, I'm sure you're smart enough to know that the government, as well as the central banks, are, they're always coordinating. The Fed is independent thing. That's just like a public relations type of thing, right? The Fed and the government haven't been independent, I don't think ever, right? They always act in lockstep. So I mean, I think you could get these little tantrums here and there, especially when Powell obviously doesn't like Trump and vice versa. So who knows? Maybe if maybe he just does. Maybe he does just cut by 25 basis points and lets the bond market say, "Hey, you shouldn't have done that," and then essentially, Powell would blame it on the bond market to not cut anymore, just like what happened last year. So there's a few different things that could come about here. If I'm just looking at the bond market, though, which I think is one of the best indicators, for it remaining at 4.3%, right now it's essentially telling the Fed to not cut. So yeah, we'll see what happens though. What has been interesting is that with all of the global foreign central banks cutting their interest rates, as well as the United States central bank remaining paused over the past year, or this year so far, you've continued to have the dollar decline here. So that is pretty unusual. Still not sure what to make of that, but again, I don't get paid to just try and speculate on what could or what should happen. I just look at the charts and react accordingly, just like a professional athlete reacts accordingly based on his abilities during game time, right? That's how we should be thinking about it. Markets are expected a September rate cut like 90% baked in. Yeah, the futures market definitely is, but the bond market is not saying that. So when you say the market, you have to be specific with saying the futures market is pricing in a cut, but the bond market is not. I don't really hear too many people talking about that. But all right. Well, we'll go ahead and wrap it up there. Ladies and gentlemen, I appreciate everyone for joining. Have a fantastic rest of your day, and we will catch you tomorrow. Bye.